This episode of the Old Dogs REI Network is brought to you by Mino Studio. Welcome to the Old Dogs REI Network, where cash flow is king. Real estate investing, the means, so you can enjoy your retirement dreams. This is the show where we cut right to the chase. No sales pitch, no long monologues, just simple how-to real estate investing advice, so you can earn the passive income you need to enjoy your retirement today. And now, your host and chief old dog, Bill Manassero.
Hello, old dogs, and welcome to
Fun Facts Friday.
This is our once-a-week, only on Friday show, where we have special episodes not featuring guests, where I will share tricks, tips, terminology, and techniques that will help skyrocket you to real estate investing success. Today's topic is best rental property tax deductions. Yeah, we're talking excitement here. No, I'm just kidding. This is actually very important stuff. So we will be coming back to this. But first, I want to touch base with you guys like I love to do. You know, I just, sometimes just like to just kind of say, whatever. And this time I'm going to just kind of do that. I want to encourage you. I think one of the great things about real estate investing is that it does give you financial freedom, and that takes a lot of weight off of you. And I think for myself, I haven't been actively pursuing new properties lately. I'm pretty happy with what I have, and at the same time, I'm getting rid of some of the properties that just are a little bit more maintenance or a little bit more effort than others, so that I can have a more passive income source. I've just been really kind of just enjoying life here and trying to spend time with my family more. Some great stuff, just recently happened. My daughter Ariana, who I've shared with you guys before, she's the one. Yeah, I've got one of 7 here, but she is one that had the dream about Haiti that brought us all there to spend 12 years serving the Haitian people, and one of the greatest experiences of our life. And anyway, she just got married, and one of the things that I've talked about in knowing your why, and part of my why is being able to see my daughters, I've got 4 of them, be able to see them have the wedding of their dreams, and to be able to experience that with them and help them with that. And I got to just recently do that. It was so great. Now, the drawback was, like, about 2 weeks before, my wife and I got really sick. Don't know for sure if it was COVID, but whatever, we were able to fend it off, and we were doing great. But it was like right before the wedding, we're getting, oh my goodness gracious, are we gonna not be able to enjoy this wonderful wedding? And it was just a great wedding. I don't know how to, it was what she wanted, exactly what she wanted. And it was beautiful. It was outdoors. It was up in the mountains of Southern California, right on a lake, right on the lakeside. And it was just gorgeous. And it was just an incredible, and then night, the reception was outside too, and the weather was perfect. And it was just an amazing event. And so I got to enjoy that. And I was like, oh man, it's great when you can see something like that happen and think, wow, real estate really did help out and help make that happen. And then my son, youngest son, Kenny, who's the guy that does the background, during our Wrap It Up, he's like the little rapper there. But well, anyway, the little rapper's not so little anymore. He's running back now as a senior in his high school football team, and they played a local rival, Long Beach Polytechnic High School, which I don't know if you ever saw the Game Stands Tall. It's one of these football movies, and true story. about LaSalle, I believe it is, up out of Northern California, undefeated, longest undefeated record in history, and they play this team, the same exact team that my son played just last weekend. And anyway, it was a big deal and really exciting. It ended up being an amazing game. He scored 3 touchdowns. I'm just being a dad and blabbing and bragging about my son here, but 3 touchdowns, got MVP for the game. It was televised and in this big stadium. It was a big game. Anyway, it was really exciting, and I was just thinking, this is great, that we can just enjoy this time after working so many years, working so hard, and being able to just spend our time with our kids and seeing them enjoy themselves, and it's just great. So anyway, I'm just sharing just off the top of my head. I know I'm taking a lot of your time here, but I think it's important that when we get into real estate investing, that we really have an idea of what we want, and really, are we going to keep doing it, or when we're going to stop too, and when we're going to pull back a little bit and just enjoy the benefits of it. Or I had a guy on I just interviewed, I think it's going to probably come out after this, who will share how he did all this real estate and he did really, really well, and then he basically sold it all and put all his money in crypto, and now he's making cash flow through crypto. I mean, it's just there's a lot of different ways that people have to deal with their success in real estate, but I think that it's important that we know our why when we go into it. So the tip of the week this week is know where you're going before you start. And I think that that's really important. I think if I were to say the number one most important thing is know your why. And then secondly, I'd say know where you're going and have a clear strategy as to where you want to go and how you're going to get there before you spend a single penny on real estate. That includes paying mentors or what have you. I think it's important because there's so many different factors and variables in real estate investing. It's much too easy to get sidetracked. And I say this from experience. I have a bookshelf filled with flipping courses and wholesaling courses and all these things that I never really did, but it just took me away from the goal. If I would have focused on multifamily, which is really what I wanted to do, I guess all along, but didn't think I could do it because it seemed like too much to start with. But yeah, I talk to guys all the time and gals that have started multifamily, and that was the first thing they invested in. So I think it's just knowing what it is you want, and there are so many different ways, and everybody's going to have their own focus of what's going to be important. Is it going to be what kind of asset class? It's going to be residential, commercial, land, special use. Are you going to be flipping? You're going to be wholesaling, lease options. I mean, on and on and on. There's so many different things. You're really finding what is going to work for you and knowing what your end game is too. That's really important, because you can just keep doing this and you kind of miss out on a lot of the great things that may be happening in the world around you and your family and so forth. So it's just tying it down. New investors, I think, should pick a strategy, decide what works best for you, and and then just put together a plan and stick to it and fine tune it as you go along. I recommend a little notebook that's got all your strategies in it and your goals, and you keep refining it as you go along. And as you achieve your goals, then you're going to probably shift what you're doing. So anyway, that's the tip of the week. Know where you're going before you start. Now let's jump into our topic, best rental property tax deductions. Now, I have always filed extensions as long as I have been in real estate, and I just find it's a lot easier for me just trying to collect a lot of the information that I probably should have been collecting all along, but nonetheless, it gives me that extra time I need to look at all the possible deductions and so forth that I can get. Most real estate investors purchase rental property for the monthly income, potential appreciation, right, over the long term, and available tax deductions. So even if you're working at a full-time job, those tax deductions can help a lot. So in today's podcast, I'm going to take a look at how deductions on a rental property work, and then give you sort of 25 of the best deductions that I know that I think might be helpful to you. There's others, but I'll try to zip through it as much as I can. So first, just what are rental property deductions? As the IRS reminds, an owner of rental property has a federal tax responsibility to report all rental income on the tax return and deduct the associated expenses from the rental income. Common deductions a rental property owner can take include things like necessary expenses for managing and maintaining a rental property, ordinary expenses such as mortgage interest, taxes, advertising, utilities, and insurance, certain materials and supplies, depreciation expense to cover the cost of the building and improvements. Those are some of the key deductions or deduction categories. And the way deductions work, it's pretty simple. Okay, a simplified version of this. And again, if this is too rudimentary for you, I'll get more into the specific topics in just a second. But just you receive rent. Let's say we can that you record your income and expenses on your Schedule E. This is for those in the U.S. here that are listening. Your rents received, for example, let's say you've got a rental property, you get $18,000 a year. Okay, your operating expenses are $10,000. Your depreciation, $5,000. Owner expenses such as maybe it's an out-of-state property and you're going to fly out there and visit. Maybe you spend $1,000, flying out, hotel, rental car, or what have you. So your income reported on your Schedule E is only $2,000. Okay, so you went from $18,000, right, in your gross rents to $2,000. So that's a simplified example, but that's basically what you're looking at doing. Any remaining taxable net income or loss from the rental property is then reported on Form 1040, Schedule E, Part 1, and is added to an investor's total taxable income. However, even though the income from a rental property has already been reduced by deducting operating expenses, owner expenses, an investor can still claim additional deductions included on Form 1040, such as standard itemized deductions before paying personal income tax. Now, I did this on a regular basis, and I had years where I had negative income. And I was so excited, I didn't have to pay any taxes. But then I went to banks and tried to get loans, and it was like, dude, you've got negative income. So it's not always the greatest thing. It is great not to have to pay the taxes, but I think you also have got to have some sort of income that you can report, because I had so many deductions, especially because I was doing a lot of capital improvements and things like that, that it just cut into it so much it created negative income. Anyway, I'm going to get into the 25 sort of best rental property deductions. Many beginning real estate investors are pleasantly surprised to learn that the tax law in the U.S. is extremely friendly to rental property owners. I don't know that it's going to stay that way forever. That's why I think it's important that you can take advantage of it when you can. If you have an extension, you don't have to worry about filing until October. It's already September when I'm recording this, so I'm pretty well wrapped up my taxes for the year. But you do want to take advantage of these as they exist, because they are discussing taking away certain deductions or changing the percentages on these deductions. So here are some of the common things, okay, that I think are some of the the best ones you can get. Advertising and marketing, number one. This is anything from a for rent sign in front of your building to paying for advertising on places like apartments.com or Craigslist or Facebook ads or whatever it is to promote your property to get tenants in. It also includes things like a property website, which I recommend. If you've got multiple properties, you can put multiple properties on a website, but it's a good kind of marketing, and you can Also make special offers to people, all kinds of things that really work well. So I think websites are a smart idea. Also, you can have professional photography and videos done, and any fees paid to any kind of rental listing website. So that's advertising and marketing. Number two, closing costs. We talked about this in other shows. Interest, mortgage points, and real estate taxes can be deducted the year they are incurred. Other real estate closing costs, such as recording fees, transfer taxes, and title insurance, must be added to the cost basis of the residential property and depreciated over 27.5 years. And there are other ways to accelerate depreciation. I'm not going to get into that. Continuing education, even books that you buy, or maybe you pay to go to a seminar or something like that. Those can be deducted. Tuition for any kind of continuing education that may help your business as well. So it may not be directly real estate related, but an accounting class or something like that you could deduct. Then you've got depreciation, different types. Building depreciation, real estate investors can help offset the cost of rental property through deductions for depreciation. IRS Publication 946 explains how to depreciate residential real estate over 27.5 years to reduce taxable income. For example, if the value of the single-family rental home is $110,000, excluding the lot, investors can claim a depreciation expense of $4,000 per year. There's also another type of depreciation, a segmented depreciation. The IRS also allows rental property owners to depreciate items such as new appliances and carpeting over 5 years, office furniture and equipment over 7 years, and roads and fences over 15 years. There are other types of depreciation. I'm just trying to give you, again, the best or the most common. Dues and subscriptions is also another common one. If you've taken advantage of free online resources about real estate, maybe you attend RIA meetings and so forth. Those things are deductible. Any kind of organization fees, that type of deal. Home office. Real estate investors who work from home may qualify for a home office deduction. The IRS offers a simplified home office deduction that is easy to calculate and expense from your rental income. Insurance, landlord insurance premiums are another tax deductible expense. Real estate investors can claim. Rental property owners purchase this policy to help protect the home and for extra landlord liability protection. That could be umbrella policies and things like that. Number 9, mortgage interest. Of course, that's the most common one. You probably already know about. If you're paying mortgage, the interest on there. If interest is paid on a business credit card used to purchase services, materials, and supplies for the it's tax deductible. At the end of each year, the lender will send a statement itemizing annual interest expense to make booking the deduction easier. Now, that's not necessarily true with commercial, but it would be for single-family homes that you'll always get that a 1098 statement. Sometimes with commercial, you have to kind of get it, especially contact them or do it yourself. Landscaping, of course, cutting lawns, trimming bushes, that's deductible. Leasing, if you have for example, somebody that finds tenants for you, whether it's your property manager or not, they are often paid a fee for each tenant that signs up for a 1-year lease and what have you, and then that's deductible. Licenses, sales, and use taxes. Some states or counties you're in require that. A local business license, annual registration for your LLC are deductible expenses for owning and operating a rental property. Maintenance, routine maintenance such as semi-annual heating and air conditioning service, inspecting smoke alarms for proper operation, replacing air filters, those types of things are deductible. Office supplies, written lease and legal forms, pens and papers, printer ink, anything you use for your office that's pertaining to your rental properties. Professional fees, hourly rates, flat fees for service or retainers paid to a tax advisor or real estate attorney or other rental property tax deduction. Property management, any fees that you pay your your property manager. They do rent collection, tenant communication, vendor coordination for repairs, routine property inspections. Property management fees range in place from 6. If you have large multifamilies, it could be even less. 4 or 5%. But I would say, like for single family homes, it's generally around 10%. You can sometimes negotiate down to 8%, but that's all deductible. Property tax on single family homes or multifamily, depending on where the property is located. Fortunately, property taxes can be fully deducted from your income generated by a rental property. There's something called, it's number 18, Qbi Pass through deduction. That means stands for Qualified Business Income. Deduction allows many rental property owners to deduct 20% of the income from a rental property business from the total taxable business income amount. Claiming this pass-through deduction for real estate can be complicated, which is why many investors seek guidance from a tax professional. And I will add right here, I am not a licensed tax professional. I am just passing information that is public information to you. And I would advise, if you want to take any of these, that you would certainly talk to your CPA or tax preparer. I would recommend anybody that's got real estate, whether it's just one rental home or not, is that you have a CPA that has experience, hopefully is a real estate investor that understands these deductions and their applications. So, but as I mentioned, I'm just reaffirming, I am not a tax professional or a legal professional here. I am just passing on public information. Repairs, that's another one. Fixing a plumbing leak, repairing a light socket, unclogging kitchen disposals or toilets or what have you. That's all. Those are legitimate repair expenses that are deductible. Some municipalities require a landlord to collect a sales or use tax on rent paid by a tenant. Taxes are collected as part of the rent payment and remitted to the city or state once a month. Telephone expenses. Many rental property owners purchase a cell phone specifically for business use and pay for the monthly service using a business credit or debit card. Tenant screening. While many landlords require a tenant to pay to be screened, others consider the cost of tenant screening as a normal business expense, or some may give a discounted screening where you're actually paying a little bit more, but you have your tenants pay part of it. So that other difference. Fees paid by a landlord for tenant screening reports such as credit check, rental history, eviction, criminal background, those things are rental property tax deductions. Travel, local, auto costs such as going to a property for showings, meeting a contractor for an estimate, picking up supplies using the standard mileage rate deduction of 57.5 cents per mile, or the actual expense incurred. Again, these things are subject to change. Travel, remote, okay, when you've got long distance, when you've got properties in other states, and you're going to visit those states, those travel expenses are deductible. However, the IRS requires the purpose of the travel to be mainly for business and expenses to be reasonable. Finally, number 25, utilities. Sometimes a small multifamily property like a duplex or triplex has a master meter for electricity, water, or gas. Landlords who pay for utilities include the cost in the tenant's monthly rent, then deduct the utility cost as an operating expense. So utilities, yeah, it can be handled in any number of ways. Maybe some are paid by tenants, some are paid by landlord. There's also RUBS type programs where the tenant pays the sort of the conglomerate if there are common expenses. Of course, that would be something you'd want to talk to your accountant about, whether or not you can deduct any of that, because you are getting reimbursed for that. So that is a quick overview of sort of the best rental property tax deductions. There are others, but I think that those are probably the most common as well. Well, that's it for today. Please note, Old Dog listeners, everything presented here today, and there are quite a number of different items here, and there will be some links as well. Please note, Old Dog listeners, everything presented here, including links, can be accessed in our detailed show notes on the Old Dogs website at olddogsreinetwork.com/blog. And you're going to look for the episode entitled Best Rental Property Tax Deductions. Well, that is the show for today. Remember, cash flow is king and real estate investing the means. Until next time, keep moving forward and may God bless.
Thank you very much for visiting the Old Dogs REI Network. We would greatly appreciate if you would stop by iTunes and let us know what you think of the show. We would love if you could subscribe to the podcast, give us a 5-star rating, and write a review. The more ratings and reviews we receive, the more visible the podcast will be to others. Thank you.